I'm Mehdi Sunerji, and welcome to Your Finance TV's Crypto Revolution. We're here with Adam Blumberg, co-founder at Interaxis. Adam, how are you, mate?
I'm doing great, Mehdi. It's a beautiful, almost fall day, so I'm excited to be here. Always something going on in crypto world, and it seems like there's a little bit more than usual.
There is, and there seems to be, I feel like last several weeks have been a few leanings towards the negative. I'm feeling a bit more upbeat. I know the price action and stuff on things, might be a little bit up here and there, but nothing crazy. But I feel like the news flow and what I care about is the institutional side. I feel like there's been a bit more of an institutional focus on crypto again, which excites me. But Adam, before we dive in, don't forget to like and subscribe if you want to stay on top of our content, and make sure you drop us a line if you want us to talk about anything. I hope you've subscribed, Adam, because otherwise I'd be very, very disappointed.
Of course, I've subscribed, Mehdi. I see all the videos from Your Finance TV.
Good to hear. So, Adam, let's kick it off again. As we just said, with something institutional, and who's come to the party is Citigroup. They're debuting their token service into their dive into the digital asset world. So, what are they doing that's new and exciting for the party?
Well, it's new and exciting for Citigroup. It's not exactly new and exciting for the blockchain world because they're jumping in, kind of doing the same thing, honestly, that JP Morgan has done and other large banks have already kind of started, which is, first thing is they are what's called tokenizing deposits, right? So I put my dollar in, I put my $100 in, hopefully one day I put my $1 million in to the bank, and they're going to create a digital token to represent my dollars. Now, that's not incredibly different from what they do now. Most people would say, look, the dollars that I have at the bank are digital anyway, right? They make an accounting entry and bam, they go lend out that money. But the difference here, Mehdi, is by tokenizing it now, we can have kind of an instant settlement, right? So if you live, here in this country, if you lived in another country and I'm sending you money and it's via these Citi kind of blockchain rails, we can have the ability that you receive that money in your account instantaneously. It's not just an accounting entry that you receive the money, you actually receive the tokenized dollar in your account instantaneously. That's a big change, right? We're used to T+2 or T+3 settlement, or God forbid you have to send some money overseas and it's like 7 or 8 days it might take because you have to, jump on the backs of all these other systems. Now you have the ability through Citi and again, same thing kind of JP Morgan's doing, that we're getting to this idea of I'm going to settle my transactions on chain or on a public blockchain, which again is instantaneous, it's transparent, it's settled. I can see that it's already happened. This is a big step, and it's a big step from a bank the size of Citigroup.
So, Adam, that leads me to the question: how does that impact the likes of FedNow? Is that going to be a competitor, or is that just, are we all just happy by REL?
No, I think it's definitely a competitor to FedNow. Look, I believe, and I don't have any research to back this up, I believe that FedNow probably could have been launched 5 years ago, 10 years ago. It's not like it's world-changing technology to say we're going to instantaneously show your deposits versus take 2 or 3 days. They were taking 2 or 3 days because they wanted to. Now with blockchain technology, I think, the Fed launched FedNow to go, oh, people want instant settlement. So we're finally going to give it to them. Now you don't have to use your blockchain thing because we're giving that to you. But what Citi and JP Morgan and others are saying is, one, FedNow is not international. We are international. We have clients all over the world. We need a system that's going to transmit the money internationally anywhere we want. And we would rather be in charge of the system than the Fed, I think. So yeah, I believe it is a competitor to FedNow. And it's a competitor that is worldwide adopted, that is more transparent, that is not run by the US government. And, if you want to extrapolate a little bit further, Mehdi, we're seeing other governments around the world say, we're tired of being run by the Fed. We're tired of being run by the dollar. And so what Citigroup and what JP Morgan and others are doing is kind of going along with that, saying we need something that is international, that's going to settle instantly, that's going to be transparent. We need to use public blockchains and tokenization instead of relying on FedNow.
So it's funny you say that Fed Now could have probably been launched several years ago. I was at a conference recently, and someone was talking about the fact that the technology that the U.S. government has on blockchain side of things, and to replicate Fed Now, they've been utilizing for years within the U.S. Marine Service. I believe interpayments between soldiers, families, and other members of the Marine Corps have been utilizing this for several years already, very successfully, very easily, instantaneous payments. So, it just highlights that there's a reason why people want delayed payments, and there's a lot of money to be made on those 2 day delays or 3 days delays that have been historically within the system. So, sayonara for the gravy train, hopefully, and we're on to instantaneous settlements.
Yeah, we're done with the checks in the mail excuse.
Yeah. My dog ate my homework.
Yeah.
So another one that's jumping into the foray of things is Deutsche Bank. They're talking more on the institutional crypto holding side, which is great to see. Deutsche, historically, I used to work at Deutsche for a couple of years in my early part of my career. They always fancied themselves as being deep divers into technology on an early level. Not so early this time, but they're at least coming to the party now. So, any thoughts, anything different in this, or is this just them finally catching up to the rest of the world?
I think this is Deutsche Bank, and look, they have been pretty progressive in the past from a tech perspective. I think this was more less waiting for a tech perspective and more from a regulatory perspective, right? Obviously, being more of a European bank, they're waiting for the EU regulations, which have come out, and now they're launching based on the EU regulations. They're going to custody crypto assets. They're partnering with a company called Taurus to offer custody. They're also partnering with Taurus to, I believe, to do tokenization. So again, there are going to be assets. Deutsche Bank, especially their investment banking arm, is likely going to be launching tokenized versions of investments using Taurus, because that's what Taurus is good at. They're a custodian, and they will launch those kinds of tokens. So this is Deutsche Bank not just kind of wading into it, but going, we've been looking at this for a while, and here's what we're going to bring to you. So again, just like we just talked about with Citigroup, it's a monstrous international bank putting a huge stamp of approval on the technology, going, we believe in this enough. This is not a fad. This is something that not just individual investors want, but we think it's going to be a huge part of how we operate our business.
Well, I feel like we're all over the map today. We've just had Citibank, Deutsche Bank. Now we've got Nomura in Japan. They've launched a Bitcoin fund, Laser Digital, which is going to allow institutional investors access to Bitcoin. I believe it's Bitcoin specific at this point. So again, another tech-friendly, tech-forward bank is coming to the party, and all of these things during a period where I feel a lot of sentiment towards Bitcoin, especially, which I guess translates to other crypto assets. There hasn't been as much warm fuzzy from, I guess, retail, probably more than anything, as there was 6, 12 months ago. So now to see the institutional side, I feel like this is a really refreshing focal point, because we might have had less news flow from retail. Seeing it from institutional coming up, I feel like they've seen things, the dust settle, they've done their homework, and they're now saying, okay, this is here to stay. Let's find a way to best serve our institutional customers and take them from here to there. And correct me if I'm wrong, but that definitely feels like the sentiment that's behind all of these delving into things.
Oh yeah, and Nomura, coming from Japan, we've talked before on this, many, about how Japan is trying to be very forward thinking in terms of blockchain technology and crypto technology, not just investment in the assets, but actually using the technology. And now here's Nomura, one of their large banks, launching this Bitcoin fund for institutional investors. And you're right, just like we just talked about with Citi and Deutsche actually using the technology. I think there has been quite a bit of talk that you and I have had around institutions starting to, come to this conclusion that digital assets are not going away, that crypto blockchain technology is not going away. Right now is not as retail focused. So I was just talking to some guys last night, and they said, wait, when do we think that this bear market's going to end? And I was like, you're looking at bear market in terms of the price of Bitcoin and ETH. I think the bull market is raging right now in terms of the development, in terms of the interest in the institutions and all that. We're not seeing it in the price because I feel like it's retail that drove that FOMO before, right? And we've talked about this again. The fact that everyone was sitting at home doing nothing for a few years and got a bunch of free money from the government, and they started putting it in Bitcoin and crypto. They started putting it in meme stocks. They started, putting it in Tesla and Netflix and everything. And they didn't really know what they were doing, right? Retail investors don't necessarily have an investment thesis. Their investment thesis is, I want the number to go up. Institutions are going, what does this mean for us? Really looking down the road at the long-term macro, at the short-term macro, at what's really happening, and going, are we ready to put some money and some investment and some time and a reputation behind this? And that's what we're seeing, and that's what's so exciting. It's not only the building of the infrastructure like we're seeing with Citi and Deutsche, but then Nomura to come in and go, we're ready to start putting money into Bitcoin now. We're ready to start helping our institutions safely put money into Bitcoin. That's a big deal. I mean, they've definitely done their homework as well.
So that's great, right? And I completely agree with you. The fact that we've seen investment in infrastructure by these large banks and institutions for institutional adoption of Bitcoin and other crypto assets, phenomenal. We had seen a slowdown in investment in other startups along the way, but well, it does look like things are starting to pick up there as well. Blockchain Capital, I believe, launched 2 new funds, and they've raised a sizable amount of cash. I believe 500 and something million. So we are seeing, and there was someone else, a crypto startup led by former Andreessen Horowitz executives. They raised, I think, 25 million. Obviously, not quite as chunky a number, but it's been a tough tape to raise capital in.
Right.
They came in, and I believe Nomura's Laser Digital has also put money in with these guys as well. So we're seeing a pickup in investment, and so the two different things. Obviously there's the infrastructure side being built for the institutional adoption, and then now we're seeing the startup and cash going into funds and raising capital again into this asset class. So how do you feel about that?
Well, Blockchain Capital raising what, $580 million or something like that into 2 funds. They have been one of the best in terms of identifying where to put their money, where to put investor money, what kind of projects are going to grow. They've been very thoughtful about it. And I believe it was yesterday, the day before, when the news came out that they had raised these 2 funds, the number of founders of early stage crypto companies that have applauded this and said, this is the team. These are the teams that have been so instrumental in the growth of blockchain technology. They hadn't been as into the FOMO. They hadn't been as into just putting money into projects because they had money to burn and they wanted to throw money at something and hope that it went up. They've been very thoughtful about it. And that's why it's a really big deal that after we've talked about the amount of venture funding and venture raising even into crypto went down so significantly, now for blockchain capital groups to come out with $580 million at the same time that you and I have just talked about, there's been all this growth, there's been all this infrastructure growth, there have been institutions coming to the table. This is the time for them to jump in and go, we know we have a better idea. We feel like a lot of the bad actors, a lot of the bad projects, a lot of the bad narratives have been thrown out. We're ready to put some money into some real projects, real infrastructure, real teams that are going to build the future of this. It's great to hear.
Well, I feel like we've just had this really good, exciting, conversation about progress in the space. And I feel like I'm going to slam on the brakes a little bit because as with everything, we know that there's going to be roadblocks somewhere along the way. And, not necessarily a roadblock. I think we can look at this in 2 different ways. Excuse me. But like if we look at the regulatory side of things, there's been more headlines out there. Some of the naysayers and skeptics like Elizabeth Warren are garnering some more support. I guess 9 senators came out publicly backing her stance on crypto as being a tool for the nefarious and looking at how they can be how crypto can be used in illicit ways. But yeah, and correct me if I'm wrong or if I'm too rosy-eyed glasses. If I'm looking at this with glass half full to a certain degree, first of all, I doubt they can lead to a ban, a full-on ban of any crypto or Bitcoin and such. So what this might just do is force the hand to get more structured guidelines from regulators. So even though they're saying that yes, it's bad, it's illicit, this, that, and the other, I think this could slowly, this not slowly, this could help push things far forward in getting rules and regulations around crypto assets.
Um, it might be able to do that. There's definitely some talk in Congress in Washington about it. Of course, these other senators that came out with Elizabeth Warren, these are people that were already anti-crypto. So it's not like she went and recruited more people. She just, named names of people who are going to be on her bandwagon. And I think we've talked also, Mehdi, about how it's, coming into an election year, this is going to be a topic. It's not going to, I think, be the topic that sways an entire election, but it's one of those where I think the incumbents or those that are challenging are going to utilize it. And I don't know if it's necessarily going to be a pro or anti-crypto thing. I think those that utilize going against Elizabeth Warren and these other senators, or even going against the current president, they're going to utilize the anti-innovation argument, right? The anti-innovation, the if we don't do this, other governments are going to. And unlike, maybe what happened 2 years ago or 4 years ago with elections, where you go, oh, it's this little crypto thing, it's not a big deal. You and I have already said the names: Citigroup, JP Morgan, Deutsche Bank. We've talked about BlackRock before. That is a whole lot of money going to elected officials or hopeful elected officials that those officials are going to want. And the likes of BlackRock and JP Morgan and Citigroup are not going to be willfully donating to officials, to Congress, to members of Congress who are going to knock down their investments, who are going to knock down what they're trying to do, and ways to make them more efficient and places they're putting a lot of their money. They're not going to do that. So yes, it's crypto. Yes, it is a micro I guess micro investment, micro cap compared to everything else in the world traditionally. However, it's an innovation play. And those companies, again, the Fidelity, JP Morgan, and everyone, their money is going to go to whoever is going to further their causes. And in this case, Elizabeth Warren and these others are staunchly digging their heels in and saying, we don't want this. And Larry Fink, even Jamie Dimon, believe it or not, is probably going, we do want this. This is going to help us. It's going to help Americans. If you're not going to do it, we'll find someone who will. Right? We've talked about the same thing with Gary Gensler. It's going to be a political liability that's not worth it because the technology is going to keep moving forward. The market is going to keep moving forward anyway. So why, from a politician's standpoint, are they going to dig in their heels and have this liability on their hands when they can very easily go, you know what? This country's always been about innovation. We're going to allow it. We're going to put some sensible regulations so people don't get cheated and lose their money. But why are they going to take on that political liability in a monster election year?
And yeah, it's, as you touched on it there as well, it's not a US thing, it's a global thing. And for them to sit there and try and fight these things, it's like trying to stop water, right? It's gonna go around you. And like it or not, it's here to stay. So one way or another, people will figure out a way to utilize it and be involved with it. So good luck with that. But
and the interesting thing, Mehdi, well, I don't know if it's interesting from a political standpoint, and I don't have charts, I don't have polls or anything to back me up on this. But I would be willing to bet that if a candidate came out and said, look, I'm pro crypto, I'm pro Bitcoin, they will get more voters. When candidates say I'm anti-Bitcoin, anti-crypto, I don't think they get more voters. I think they just get the same voters, right? So if you want to add more voters, especially younger ones, you talk about being pro-innovation and pro-crypto and pro-Bitcoin, but I don't think digging your heels in is going to get someone to switch sides for you.
Yeah, no, that's a very good point. And we'll try and figure out how to do a poll on that. But it is definitely a solid point. I'm not sure how to segue into this next one, but what about them stoner cats, Adam?
Yeah, so that was a fun one. We've brought Mila Kunis and Ashton Kutcher in to the mix,
and Jane Fonda.
Oh, I forgot about Jane Fonda, but this was an interesting project. This is kind of disappointing, honestly, that the SEC decided to go after them. Yeah, they raised money. Maybe there's some issues of whether or not it was a security, but it's an interesting project in that not only was I able to buy an NFT that looked like a cat, but they were making a cartoon. Like it was going to be something where I was going to get to participate in the licensing and the royalties and all that. This was going to be fun and an actual good project that wasn't just buy a picture and hope it goes up in value. It was buy something that might actually have value. And disappointing for the SEC to come down and for the StonerCats to not basically have the funds to go fight it. Right? They don't have Coinbase money or Ripple money to go fight it, so they just kind of take their enforcement action and pay their fine, and that's it. So, in my mind, it's disappointing and it's very anti-innovation.
I agree. It is a real shame because you would have got to see like creation to distribution to monetization to like just seeing that whole flow of the ecosystem that we've discussed time and time again on how can NFTs be utilized, what's their value purpose, all these different things we would have got to see nicely and but this is where the SEC, for them it's an easy win, right?
Yeah, and I think they're just again, I keep talking about digging your heels in. I think they're just continuing to dig their heels in and go by the letter of the law. Here's what we think. This is this is a security, and you didn't do this appropriately. And they're not thinking about, in my mind, the spirit of the law, which is, yes, we want to protect people, but also do so in a way where we find innovative ways to invest our money. And this was going to be, ideally one of those projects. We've talked about it with the Bored Apes, and we've talked about it with CryptoPunks and others, where you maybe have the opportunity to, look back, whatever, 50, 60 years. Imagine if you could own some of the rights to Mickey Mouse or Donald Duck. Like that would be a big deal. And that's the direction we're going with NFTs and something like StonerCats, and do it with people who were thoughtful about the development of it. And they weren't just launching it to, raise money for themselves. There was a project behind it. And I think that's what's so disappointing about it. This was not one of those NFT PFP projects just so I could have a picture on my Twitter profile.
So, Adam, I guess we're on to the other side of the world again. ANZ, Australian New Zealand Bank, they are leveraging Chainlink CCIP for cross-chain operability. This is again another utilization being put together by the big financial institutions. And on the other side of the world, what are we seeing here?
Yeah, what Chainlink has done is really important, and they've been all over the place lately in terms of news. But they launched this cross-chain interoperability protocol, CCIP, and they've actually partnered up with Swift to start kind of experimenting with this. And now, as you said, the bank in Australia, ANZ, I'll go with Z, ANZ is working with Chainlink on this cross-chain interoperability protocol, and it's basically what Chainlink has done, has said, we're giving this protocol such that you and I can exchange tokens, can exchange cryptographic tokens on, through their protocol, even if my token was built on Ethereum and your token was built on Avalanche, which are two, kind of competing blockchains. It doesn't matter. Chainlink has built this ability to be able to swap those tokens or exchange those tokens. And this seems like maybe it's not a big deal. It's only important for, us geeks in here. But the reason why it's important is it means that the bank in Australia can build their tokens like Citigroup just did, right? Tokenizing deposits. They can do it on one blockchain that's good for them. We here in the US or at Citigroup can build on another blockchain. And what Chainlink and Swift are saying is, we can allow you to exchange those even if they're on different chains. So you build your tokenized deposit on whichever chain is best for you. I'm going to build mine on whichever chain is best for me, and we will still be able to effect a transaction. And the fact that Swift has jumped in to be a part of this is a huge deal, because Swift is all about, connecting people such that they can exchange something of value, usually dollars or some sort of fiat currency. but they've always done that by connecting banks together, right? It's always been about connecting bank backends. And now Swift, just like we talked about with Visa, just like we talked about with PayPal, is realizing their job is just to transact something of value, not to connect banks. And they're saying, this is how in the future we will transact value. We will move value around the world is through this blockchain system. And we're going to utilize Chainlink CCIP such that the bank in Australia versus the bank in the US versus the bank in Europe, which we talked about all three of them today, can build it on whichever chain is best for them. And you and I can still exchange, or I can still exchange with someone in Europe or someone in Asia. So we can actually have a global financial system that isn't siloed in certain databases. This is a really, really big deal that I don't think is getting enough publicity, but it goes to this infrastructure. This, what I say, there's a bull market in infrastructure building. This is part of that. What Chainlink has done with CCIP, I think, is remarkable and is going to be hugely important for the future of the world financial system.
Adam, I feel like it's been a very productive show in regards to discussing institutional adoption, structure, architecture, just about access to all of these things. And just out of curiosity, if I was an RIA and I wanted to learn more about these things, is there a course I could take, or is there someone I could speak to try and learn more about these things?
Oh, really good question, Mehdi. So if you go to interaxis.io and you're a financial professional anywhere in the world, you can come take our course and learn all about everything we've talked about, learn all about the basics of crypto. And we have a newsletter now too. So I'll give you that. We will put that in the show notes, the subscription to our newsletter. And we talk about things like that every week, delivered right to your inbox.
Adam, it doesn't get better than that. Thank you so much for sharing your thoughts as always. And I look forward to speaking to you next week.
All right, Mehdi, look forward to it. I'm sure there'll be much more happening.
Until next time, good luck investing.